Welcome to Manifested Publishers. This is yet another time we are meeting to discuss about or to talk about advanced management accounting. The specific topic is what we introduced in our previous session, which is budgetary control and techniques. Budgetary control and techniques. So today I want to talk about advanced variance analysis. Advanced variance what? Analysis. In the previous session, and while tackling intermediate level, our variances, our material variances, and these material variances are made up of two items. Number one, material price variances, or are made up of two items. Number one, material price variances and material usage variances. Your material usage variance, which we simply denote as MUV, could further be classified into two. Okay, number one is material mix variance and material yield or quantity variance So we are saying that your material usage is made up of other two, material mix and material yield variance or material quantity variance. These variances of mix and yield or quantity are variances that help us analyze the material usage when you are using more than one type of material. When you're using more than one type of material, we will further break them down into material mix and yield what? Variances. And we can do that using a question, or I can show you that practically using a what? A question. And the question I want us to talk about is a question on previous sittings. Question on previous years. November 2019. I want us to do a question on November 2019. Question 3A. Question 3A. November 2019. 3B actually, not 3A. 3A is a learning curve. So November 2019, question 3B. Where they're saying, Dow Chemical Limited manufactures a single product XP. The following information for the financial year 2018 relates to the product. Number one, standard material cost per unit of XP. You have your materials, your kgs, and your price per kg, and in total. You have your labor hours. Let's first ignore the labor hours. Then budgeted sales for the period amount to 45,000 units at 260 per unit. There was no budgeted opening and closing inventories of product XP. The actual materials and labor used are as follows. So you have your materials, your kgs, your price per kg, and your total. Compute the note number 5. During the period, 4,100 units of product XP were produced and sold for 1158,000. Compute the following variances: material price variance, material mix variance, your yield, and your labor rate what? Variance. Right. So let me show you this. You have your standard cost. I'm just going to transfer these in the board very fast. Standard cost per unit, so that we move together, of product XP. You have your material, kgs, price per kg, total, which will be in what? Shillings, F, G, H, 15, 12 and 8, 4, 3 and 6. This should be 60, 36 and 48. So that the total is 144. The total there is 35. Okay. Then your actual materials. In fact, I can just have them here. Your actual materials. You have kgs, price per kg, and totals. $59,800, price of 4.25. Your total is 254,150. 53,300. 2.8. 149,800. 33,300. 6.4 and 213, 100 and 20. Then your actual production, or let me say your budgeted sales. Your budgeted sales is 4,400 units, 4,500 units. Actual units produced. So your actual production and sales is 4,100 units. This is your budgeted production. 4,500. Let's start with the first variance. Material price variance. Your material price variance, which is simply denoted as MPV, is the difference between the standard price and actual quantity and actual price, but for the actual quantity. Okay, so here we're going to say MPV is actual quantity, standard price minus actual price. Your actual quantity purchased is 59,800 for who? For F. Your standard price per kg is 4 minus an actual price of 4.25 G. Actual quantity 53,500. Standard price per kg is 3. Actual price is 2.80 H. Actual quantity 33,300. Standard price per kg is 6. Actual price is 6.4. So let's get these variances. 14,950. That is 14,950. Which you're going to say is what? Adverse. 53,500. 3 minus 2.8. 10,700. Which is favorable. It is favorable because you bought at a cheaper price. 6 minus 6.4, 13,320. This will be what? Adverse. Why? Because you bought at 6.4, but you had budgeted to buy at 6. $17,570, which you're going to say is what? Adverse. Remember, you add the adverse, subtract adverse, favorable, and you also add favorable what? Favorable. Okay, let me show you the material usage variance. MUV, which is a standard price, standard quantity of actual production minus actual quantity used. This is the actual quantity used. Okay, your standard quantity of actual production, you say it is your standard quantity per unit. You multiply by actual who? Production. You multiply by actual production. Material F, G, and H. Your standard quantity per unit in kgs was how much? Was 15. You multiply by an actual production of 4,100 units. Your standard quantity per unit in kgs is 12. You multiply by who? 4,100. This is 8 by 4,100. So 15 by 4,100. So that means you use 61,500 kgs. 49,200 kgs. 32,800 what? Kgs. You can then add them so that the total standard quantity of actual production is 143,500. But remember, we want our usage variance. So we're going to say, therefore, your material usage variance can start with F. Your standard price is 4 shillings. Your standard quantity of actual production, we've just calculated it as 61,500, minus the actual quantity consumed, which was 59,800. G. The standard price per kg is 3. Standard quantity of actual production 49,200 minus your actual quantity 53,500 here. H. Your standard price is 6. Standard quantity of actual production 32,800 minus 33,300. 33,300. Let's then get our variance and see. 6,800 12,900 3,000. But then we need to analyze whether it is favorable or what? Adverse. It is important we analyze whether it is favorable or adverse. You had budgeted to use 61,500 kgs, ended up using 59,800. Therefore, that is what? Favorable. You had budgeted to use 49,200 kgs. You ended up using 53,500. That will be adverse. And lastly, H. You had budgeted to use how much? 32,800. Ended up using 33,300. That will be what? adverse, but then you add that. The adverse plus adverse minus your favorable 9,100, which you're going to say is what? Adverse, which you're going to say is adverse. But now we've said where you have more than one type of quantity you are using, you can further calculate your mix variance and your yield variance to get your usage what? Variance. Okay, so we will write here alternatively. Write this nicely for you. Alternatively, your material, the material usage variance can further be calculated as your material mix variance plus your material yield or material quantity variance. Okay, where your material mix variance MMV, you will say it is a standard price, actual quantity in standard mix minus actual quantity in actual mix. Actual quantity in actual who? Mix. It is the actual quantity in actual mix. Okay, let's have these materials F, G and who? H. Your standard price is 4, 3 and 6. Your actual quantity consumed, remember, consumed or used 59.8, 53.5 and 33.3. 59.8, 53,500 and lastly 33,300. So that the total kgs that resulted in you producing 4,100 units will be 146,600. Okay. Your standard mix basically it is a ratio of how you are using your kgs to produce a single unit, to produce output, and you are using 15 kgs per unit, 12 kgs per unit of G and 8 kgs per unit of H. So your standard mix will be in the ratio of 15, 12 and what? 8, so that your total kgs to produce a single unit will be 35 what? Kgs, 35 kgs. Okay. Our actual quantity in standard mix simply means you share this actual quantity using the ratio of your standard mix. How is that going to be? You're going to take 15 over 35 times 146, 600. 12 over 35 times 146, 600. 8 over 35 times 146, 600. So what have you done? You have shared your actual quantity using the ratio of standard mix so that you get your actual quantity in standard mix. Your actual quantity in standard what? Mix. This will be 62,828.57. Can round that off. Then your actual quantity in actual mix is simply another name for actual quantity. So the actual quantity in actual mix is simply your actual quantity. Can we now get our variance? Yes, we can. Let's get our material mix variance. Okay, your standard price is 4 shillings into bracket 4 shillings into bracket. Your standard, your actual quantity in standard mix is 62,828.57 minus your actual quantity in actual mix, which is 59,800. 59,800. 12,100 and what? 14.285. We can say 0.29. Can round off to 2 decimal places and say 0.29, which we are going to say is what? 0.286, which we're going to say is what? Favorable. That is favorable. That is favorable. Again here, we get our actual quantity in standard mix here by taking the standard mix divided by the total standard mix times 146,600. $262.86 or 857. Your standard price is 3. Standard actual quantity in standard mix 50. 262.86 minus your actual quantity in actual mix 53,500. 9711.429, which is going to be what? Adverse. So this is adverse. 33,508.571 is the actual quantity in standard mix. Your standard price is 6. 33,508.57 minus an actual quantity of 33,300. 1251 point what? 429, which is favorable, which will be favorable there. We add the variances together if they are similar. .28 what? 6, which will be favorable. Right. Okay. That is your material mix what? Variance. Let's get our material quantity variance. Which is your standard price, standard quantity in standard mix minus actual quantity in standard mix. In standard mix, can start with F. Your standard price was 4. Your standard quantity in standard mix simply represents your standard quantity. And your standard quantity, we calculated it here. The first working when we are getting our usage variance 61,500 minus your actual quantity in standard mix, which we've just calculated 62,828.57. Let's confirm that. 53, 14, 0.286, which will be favorable, adverse, not favorable, adverse. You've used more quantity of raw material F, that is 3. Your standard quantity is 49,200 minus actual quantity in standard mix 50 to 62.86, 3188.571. That will also be adverse. FGH 6. Your standard quantity minus 0.57. $4251.429. We need to identify whether it is favorable or adverse, and this will be an adverse variance. That will be an adverse variance. $12,754.286, which is what? Adverse, which is who? Adverse. Okay, let's calculate our what? Alternatively, we can even get our material yield variance, which is your standard material cost per unit. That is given, SMC means your standard material cost per unit. Your budgeted quantity minus actual quantity that was done what? Produced. So this is the quantity of production, not of material used, of the quantity of production. Actually, this should be your standard yield, not actual quantity. Standard yield minus actual yield produced, that way. So just that, sorry. Standard yield minus actual yield. Now we have to calculate our standard material cost per unit. Our standard material cost per unit is here, 60, that is 648, which is how much? 144. 144. Then we need to determine our standard yield. So let's determine our standard yield. Computation of standard yield. Now, for us to produce 1 unit of who? Of our finished product, we are using how many kgs? 35. If we produced 4,500 units, how much quantity should we have done what? Produced. So we first identify the kgs we should have used for our production, for our budgeted what? Production, keeping in mind that you are using how many kgs? 35 per unit. That means you used 157, 500 what? Kgs. But when you actually used how much? Your actual kgs here that you used to produce your total output was how much? Was 146,600. So just that. say that 4500 units you use to 157,500 what kgs. With 146,600 kgs, how much should have been your what? Output. How much should have been your output? 41.88571. Therefore, your material yield variance, you're going to say your cost per unit of 144, your standard yield per unit minus an actual yield of 4100. Your actual yield is your actual output. Your actual yield is your actual output. 12,754.286. You had budgeted to produce 4188 units, ended up producing 4100, so your output has reduced. So that is going to be what? Adverse. That is going to be adverse. Now remember, your material yield variance and your material quantity variance should give you the same answer. Your yield variance and your quantity variance should give you the same answer. Let's confirm that that is indeed the case. Your quantity variance is 12,754.286, which is very similar to your yield variance there. So those should be equal. Those should be equal. Now let's get our material usage what? Variance. Therefore, your material usage variance, we've said it is the summation of your material mix variance, and your material mix variance is here, that is 654.286, which we know is what? Favorable, plus your material yield or quantity variance, which is how much? 12,754.286, which is what? Adverse. So that should give you 9100 what? Adverse. That should give you 9100 adverse. Please confirm that this usage variance here, this usage variance there, and that usage variance give you the same answer. Those two should give you the same what? Answer. 9100 adverse for both. Alright. Then let's determine our material what? Cost variance. Material cost variance. Let's write it here. Material cost variance, which we simply denote as MCV. Your material cost variance is the summation of your material price variance as your material usage variance. Your material price variance is here, 17,570 adverse plus 9100 who? Adverse, plus 9100 adverse. 26,670, which is what? Adverse. 26,670, which is adverse, and that is your material mix, your material yield, your material quantity, your material usage, and your material price variance, as well as your cost variance. So these are the advanced variances for who? For materials. Okay, those are the advanced variances for materials. Right.